Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Quite a busy day of events. Well, the last couple of days, both last night and today. Let's just shoot off with the big moves that we've seen overnight. Both currencies and also bonds, in particular, were moving in very active volumes. Everything started out in the mid-morning last night in the Eurozone when the Eurozone CPI numbers came out higher than expected. Now, as a result of that, there were a lot of plays on the euro dollar against the US dollar, meaning the euro dollar shot up together with some of the other dollar pairs, suggesting that we may see a convergence of what was once a divergent policy play. Basically, with the CPI in the Eurozone higher than what was expected, essentially there is talk that or there is fear that perhaps the ECB could ease back on the QE program that they have started only in March, clearly highlighting that the Eurozone might perhaps be recovering faster than expected. Now, as a result of that, the euro dollar here shot up by more than 100 pips last night, for example. As we see in the charts down here that I will bring up, we see this huge move as a result of last night's move, and I mean essentially partly it was a result of the dollar or the DXY being knocked out. Partly it was because the euro dollar had also been sold down over this period of time. Essentially, like I've suggested in a few videos before, we like to see this whole thing break out from this range over down here. Can you just put it up? Suggesting around the 115 sort of levels before a firmer trend can be perhaps developed from this long pullback down here. But essentially, we are seeing the Aussie dollar also take a huge move up. And this has come on the back of the RBA holding their rates flat. Now, this was not unexpected, meaning it was expected for rates to be held flat. But essentially, this big bounce that we saw from the Aussie dollar, clearly is a rebound from this 13 days or so of selling down. Essentially, it's opening reasonably steady down here while the market awaits for further data today. The data that can come from a GDP number from Australia land at 9:30. Again, if this number is going to be hotter than what was expected, then we're going to see a more follow through on the bounce last night. Now, very quickly, what I think a lot of the major moves last night came from the sell down in bonds, U.S. treasuries, the Bund with German Bund, and also the UK Gilt. These are all 10-year series or 10-year bonds. They've all been whacked down really hard last night, and this is obviously a fear once more that the continuation of the sell down that we saw in very much for most part of April may continue down here, as most of these bonds or most of these treasuries and bonds and gilts and bunds once again testing their lows achieved in the beginning of May. It's early days, but this is obviously preparation once more that the market is actually trying to make in view of a US hike later on this year. Over in Singapore, we saw quite a bit of action also. The Singapore 30 index testing its low of around the 200-day moving average. It was sold down quite hard, about 1.5% on the cash side. Now, the selling yesterday was very much typical of institutional selling, because we saw shares like Singtel, OCBC, DBS and UOB, basically blue chips, dominated in most actives in terms of value traded, and also most of them were knocked down really hard, about 2 or 3% in some cases. Now, the selling is more a sense of repositioning of funds out of Singapore, out of ASEAN region into perhaps Northern Asian markets. We wrote a piece, we'll be putting out a piece quite extensively on this today. Please look out on our website this note. Besides that, First Resources, okay, I wanted to mention a little bit about this because First Resources, as we highlighted about about a week and a half ago, was a benefit of higher CPO prices or crude palm oil prices, which we saw active trading taking place in the Malaysian futures index. Again, CPO prices saw big gains yesterday, culminating in a week's gain of around 10% or so. Upstream players like First Resources, Golden Agri would seem to benefit from that. On this charts, it seems that the first support, or rather the first resistance level, is around the 210, followed by the chart, rather a gap of around the 215 to 220 sort of levels. We may see this thing thrust towards that direction. If it does, it will probably have to be supported by further firmer prices on the CPO levels itself. Furthermore, should this move up fail, we may see this thing pull back to the first support level of around 205, followed by $2, and then a firmer support once more at around the 190, 197, 198 levels, so called. But look out for it. Look out for a note. We did do a brief mention down there on it also. Meanwhile, that's it. Thank you very much.